Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. As you know, the market has come a long way since the August 5th bottom where we had that VIX spike up to 66. It's pretty much a V move up. We've had like a one-day pullback last Thursday after that DeMark 9. We're pretty close to the highs here. We've come a long way, kind of a V move. This is the KISS trend system. You could see it went long a few days off the lows. It's already had 3 smart trailing stops. So we are nearing an area where we're likely to see a pullback soon. It would actually be healthier for the market. Plus, as you know, we have NVDA earnings this week. It is on Wednesday, August 28th after the close. This is the NVIDIA KISS system. It's long as well. But we'll see how the market reacts for that. That's a big one. There's a lot of economic news as well. And let's go ahead and get started. And again, I'm Matthew Frailey, founder of BreakpointTrades.com. I founded it 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, such as our 21 SPY and ES mean reversion systems, with about 90% winning trades spanning over 20 years, and our amazing KISS systems, and we have other systems too. I'm a systems junkie, but we do a lot of things here, from 5 market analysis newsletters per week. We have a active trading community where you can ask questions. We put actionable trade ideas out. I mean, you name it. There's the trade ideas. So lots of stuff here. You should consider subscribing. I think you'll be pretty impressed. Also, my last newsletter, I got to apologize. I had CNBC on in the background on a browser and it was playing and it came through the audio. That's not going to happen again. I can apologize for that. So let's go ahead and get started here. This is our back-end recorder for our website subscription service. Again, we provide these detailed newsletters that are web browser based with an audio overlay. And I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Sunday, August 25th newsletter. Hope everyone had a wonderful weekend. And again, if you happen to be new to Breakpoint Trades, these weekend newsletters tend to be quite comprehensive. We've got a lot of charts here tonight, actually more than normal. Again, we cover everything in a top-down approach. First, our opening statement, talk about some admin stuff, maybe some systems. Then we go and move on into our general market index analysis. We'll look at the Dow, S&P, Nasdaq, Russell. We do a top-down approach, looking at monthly, weekly, daily, all the way down to intraday charts. We'll look at a few important indicators like the VIX, some other ones. We'll also look at the bond market. We'll look at some of the handful of major market sectors. We'll look at the US dollar, the Japanese yen. Dollar is getting absolutely pummeled. The yen's been rallying, and I called that a couple months ago. We'll look at Bitcoin, crypto, which has been doing pretty well lately, commodities, precious metals, GDX, and finally we'll follow up with trade ideas. I did add quite a few new trade ideas this weekend. And guys, like I said, this week, the big one, NVIDIA earnings on August 28th after the close. That's obviously going to be a major one. Remember, Steve Nelson is out on vacation in Europe with his wife until September 3rd, so it's just me. And again, also we launched the high performance KISS systems. And so that's been working for about 2 weeks now. You can enter your phone number for the SMS, but you need to set alerts, otherwise you're not going to receive favorites. Okay, and moving on, as far as the market here, like I said, long-term uptrend, intermediate uptrend, and short-term uptrend. That said, we got a pullback late last week. Maybe that was a fourth wave, maybe it completed that, but it seems a bit shallow to me. It's possible also that we could see the S&P perhaps make a new high, but the triple Qs, Nasdaq, which are lagging a bit, make a lower high. We'll see. Again, we've come a long way over the last 3 weeks since that August 5th low. So we could need a consolidation at any time. And in fact, it's better if the market has consolidation. You know, it's run so far so quickly with, basically a one-day pullback. It needs a rest. As far as news items, tons of news items here this week. Not going to list all of them here, but there's a lot of stuff here. And of course, we still have the potential geopolitical risk. Maybe if Iran finally attacks Israel, maybe that'll give the market a catalyst to finally pull back. Again, market's had a nice move the last 3 weeks since the August 5th low. And last week, well, we've now had 3 up weeks in a row. Okay, so this is the third week we've had to the upside. So for the week, the S&P gained 1.5%, Nasdaq 1.2%, the Dow 1.3%. So all roughly the same there. The Russell, which has been lagging, really charged forward, up 3.7%. As I also stated, U.S. dollar continues to absolutely be taken to the woodshed, down 1.6% for the week. That's a big drop, guys, in a week, and that's helping keep precious metals aloft. My concern, long-term concerns for the dollar, are the 35 trillion in debt, which I'm sure many of you are. There's no one in sight. Whether Democrat or Republican, they spend like drunken sailors. There's just no plan to reduce that debt. But the main thing that concerns me is that BRIC situation, where the dollar is slowly being replaced as the world reserve currency. It's not going to happen overnight, but it's like a cancer that is growing under the surface that you're not aware about, or at least most Americans aren't. Without that, that is what has caused the U.S. dollar being a world reserve currency is what has allowed us to spend like this and not have, hyperinflation. Yes, we've had inflation the last, couple years, but not hyperinflation. But that could change if we lose that world reserve currency. Commodities, generally we're up for the week, as you can see. Uranium up 5.9%, copper 1.4%, gold, silver up, etc. Crypto up 9, Bitcoin up 9% for the week. And let's go ahead and move on to the couple admin things for the website. So item number 2, this shows you the KISS systems. All right, this is just the standard KISS systems, not the high performance. Okay, you can see on Friday we had quite a few smart trailing stops on the indexes. New one on the S&P. The S&P related stuff: SPY, SSO, UPRO. The UPRO trade's already up 15.7% from that August 9th entry. It's a nice profits if you took it. You could see the last one made 21.5%. A lot of nice gains here. Look at the previous gains. All these are open. And moving on. Image number 3. Again, this is the high performance section. Many of these are intraday, such as all the way down to 30-minute, 78-minute, 130-minute, whatever, 65-minute. But don't let that scare you. You would think that these are day trading. They're not. I mean, a lot of these are holding for weeks at a time. Now, there's a few of these 30-minute ones, and there's one UPRO that holds pretty short term, like a few days, but most of these, the vast majority, are holding for weeks at a time. So, they're still swing trade based. You get SMS intraday alerts. These tables update intraday, unlike the KISS systems, the standard ones. Again, if you've added your phone number, you won't receive text messages until you come here and select favorites. You got to do that. If you just added your phone number, you don't have any favorites selected, it won't send you any emails. And again, there's the SMS area up there where you can add your phone number. We will be launching the KISS systems, I think, later this week. I'm going to provide a coupon. There's also some description in the table of contents text. Let's move on. Let's go back to the market newsletter at hand. So here's the index sector table, what transpired last week. Again, you can see nice rally back on Friday. Remember, the market had that nice pullback on Thursday after that DeMark 9 on the daily S&P and Nasdaq. But then we rallied back on Thursday, or a Friday, I mean. And Friday ended up being mostly an inside day for the S&P and Nasdaq. Not so for the Russell, but for the S&P and Nasdaq, mostly moved inside of Thursday's candle. For the week, you can see everything gained about 1.3 to 1.5%. The Russell outperformed. It was up 3.2% alone on Friday. Market sectors on Friday, pretty broad-based rally. Every single sector was up. There's 21 of them here. And let's see. I'm just checking something, guys. Okay. For the week, almost all the sectors were up as well, except XLE Energy, and it was just barely down. So strong technicals there. U.S. dollar, again, absolutely taken to the woodshed, down 0.8% alone on Friday, 1.6% for the week. Boy. Bitcoin, nice rally, up 9% for the week. Commodities, mostly up here. Again, weakness in the energy area, such as crude oil. Otherwise, natural gas was up. Uranium up 5.9% alone for the week. Copper up 1.4%. Weakness here in the ags, Wheat down 4.4%. Precious metals were up. That falling dollar is helping that, obviously. Silver up 3.4% alone. Gold only up 0.3%. GDX, the miners, up 2.2%. And we continue to see a sell-off in the 10-year, 30-year Treasury yield, which has also helped the market. We also want to keep an eye on this yield curve. It's up at 0.97. Has not yet uninverted. It's been uninverted for 700 days now. Second longest in history. Finally, image number 5 shows you the economic news calendar. Again, tons of stuff here. Not going to go over all this stuff, guys. But one of the big ones, like I said, is NVIDIA on Wednesday. Okay, let's go ahead and move back. Let's go ahead and move to the market charts. So first chart below, item number 6 is a weekly chart of the VIX. Again, been showing this, but the VIX, remember, on August 5th, spiked up to 65.73. It got into that supply zone, basically got to the range where it was in the February 2020 COVID crash. Well, that was a big fear bottom. That put in that market bottom, as you can see. Okay. It's obviously pulled back quite a bit since then. Next, chart number 7, here's NVIDIA. Remember, NVIDIA has earnings on August 28th after the close. Again, perfect rally off that demand zone that I had drawn in place ahead of time. That was on that Monday, August 5th. It gapped down. It gapped right into that demand zone and rallied off of it. That was a good area to take a shot long, guys. Then rallied up, and it's pretty much like the market. It's pretty much almost been a V move up. We had a nice pullback on Thursday, but that's a one day. Kind of have a bull flag look to it here. I'm wondering if we get a pop into the supply zone before or into earnings. We'll see. Again, earnings are going to be a wild card, guy. This is either going to gap up and make a new high, or to be a reason to finally pull back. There's a demand zone down here where I look for some support, as well as this 50-day moving average. Also, you can see this RSI trend line break gave an excellent buy signal there as well, confirmation. Chart number 8, here's the NVIDIA KISS system. This is right from the website. This isn't the high performance, it's just the daily. And this trade's already up 15% from this entry right here. Several days off the lows. Smart trailing stop still 108.30, so still pretty wide, but it is moving it up. Okay, again, earnings are Wednesday after the close. Now moving to the index analysis, chart number 9, here's a weekly view of the 5 major indexes. Again, after that little bearish evening star pattern we had just over a month ago in mid-July, we had a nice quick correction and we recovered quite a bit, right? The S&P is just a stone throw away from the highs, same as the Dow. Now the Nasdaq here is lagging. It's still a ways off, so I'm wondering if we can put in a lower high here short term. We'll see. Russell's coming back a little bit as well, especially last week. Chart number 9 or 10, here's the monthly view going back to the, basically 2009 lows essentially. But look at these monthly doji candlesticks here, these hanging man candles that you had. Quite the recovery. Next, chart number 11, here's the daily simple view of the major indexes. Short term, guys, your first short term support is the 9 EMA. You can see it's been holding on all these indexes. So that shows you how strong this rally has been off the lows. Again, eventually this is going to need to consolidate. My analogy would be, let's say I take you guys to the track and I have you sprint 400 yards around the track. You're going to be out of breath, huffing and puffing, needing to take a rest to catch your breath. That's the same with the market. It's had a big sprint here. It's better now to have a consolidation soon to recatch its breath, right? Instead of just keeping going. Again, simple analogy, but it does make sense. All right. Next. Now moving down to the individual indexes. Here's the Dow Jones. Again, Dow Jones, just absolute textbook. A, B, C, 3-wave pullback into that support trend line that I had drawn ahead of time, right? And pretty much a V move up. 9 EMA is your first support. We're at the top of this supply zone, but if we go through here, I mean, the double top or new highs is just a stone throws away. Next, chart number 13, moving on to the S&P 500. Here's the monthly view of the S&P going back to 1994. This is a nice long-term system chart. In fact, maybe some retiree guy who wants to do very little trades could use this. It's kind of boring. It's kind of like my old paint dry system. I thought that was always a good name, like watching paint dry. This chart gives you long-term signals. You can see this 20 monthly moving average has been a great guide longer term. And also this 14 stochastic on the monthly. This 50% area tends to be the dividing ground between bull and bear markets. Okay, you can see bear markets, you fall through it. Time those 2000 and 2008 bear markets pretty well, and whenever price goes back above 50%, you tend to be in a bull market. And you can see the pullback's been finding support at the 50% area. Okay, those are pullbacks in an uptrend. This did lose the 50% area in 2022 during that bear market, but then recovered it in early 2023. So right now we have this simple uptrend parallel channel from the 2009 bottom, and technically we're still in that. So if you count this as a secular bull market from that secular bear market bottom in 2009, I mean, we're still in that secular bull. So this secular bull has now been going on for 15 years. By the way, secular bull markets tend to be 15 to 20 years or so. So eventually this will end and we're going to get another secular bear market. But for now, it's nowhere close. If the market just has another huge rally later this year, maybe the upper channel line could be a target over time. Next, chart number 14, here's a weekly view of the S&P. Again, this demand zone we had drawn ahead of time, that's where the market found support on that August 5th bottom. You see that? These supply and demand zones are really powerful, guys. Start trying to identify those yourself. They're very powerful. A lot of traders I've seen making their living trading supply and demand zones. Okay. Anyway, moving average ribbon, you can see we had that pinch there, bullish pinch. Anyway, just a stone throw away from that high. That is a resistance up there. We're 3 weeks up in a row. So, again, soon we're going to need some consolidation just to allow the market to catch its breath via my analogy. Next, chart number 15, here's the weekly KISS systems. And again, these are weekly based, unlike the daily, so they give wider smart trailing stops. None of these were hit. They did go below their smart trailing stops on that little pullback in, or it looks like they almost did, that pullback into August. But remember, these are based on the close, so they've all been long, and really no changes. No new smart trailing stops last week on this. Next, chart number 16, here's the daily S&P KISS system right from the website. Again, while not perfect, it's done a damn good job about keeping you in the market. Again, these KISS daily systems are really like buy and hold. I know a lot of you say, oh, just want to buy and hold. Buy and hold, statistics have shown to work over the long term. Sure. But I'm always under the mindset that you can do better than that. And under buy and hold, you got to go through some pretty strong corrections and bear markets like 2008, 2022. My thing is, why go through that? Why isn't there a better way? Is there a way to mostly stay long in the market but have that protection? And that's what these KISS systems do. You can see right in the uptrends, they'll get out once in a while for a few weeks and then back in. Just like they did here, they got out, they got back in a little bit off the lows, and they got back in lower than where they got out. So you still made ground there. And this one has a fourth smart trailing stop. Okay. We had a little DeMark 9 last Wednesday, I mean. Then we got that nice Thursday pullback, but then we had the inside recovery day on Friday. Pretty close to those recent highs. Image number 17, this shows you the 4 time frames. Again, here's some things why we could get a pullback soon. First off, on the daily, just saw this resistance cycle. You see the little dots there? And look at all these here. You got a DeMark 9, you got all these A's. What is the A's? It's amateur, we call it amateur hour. Its price is going up higher and higher on declining volume. So again, while not perfect, sometimes these can signal a pullback soon. We got a bunch of them in a row. The half-day chart, the one bullish thing here is we did have a bullish moving average pinch I talked about last Thursday. So far we're getting a bounce. We're holding the ATR on these lower time frames for now. Next, moving back to the standard charts. Here's the daily S&P, just a simple clean chart. Remember, we had a simple 3-wave ABC pullback into the August 5th lows. That wasn't a bearish 5-wave trend. It was 3 waves. 3 waves in an uptrend is bullish, guys. Okay. In fact, the KISS systems, they look to buy 3-wave pullbacks. That's what the KISS system, the daily KISS system, did on the website. So looking at this, it identified a 3-wave ABC pullback here with the BPTMA Deluxe based on the 3-color change. So that's one of the secret sauces of the KISS system, is that ABC. It has that technology built in. But anyway, you can see the nice rally. We took out the downtrend line over a week ago, and we basically filled that last open gap up there. We're just a stone throw away from that 56.70 high. Okay. Short-term supports the 90 MA. Now there is an open gap to the downside, so if we get a nice pullback here, that could possibly be a magnet. Okay. But I would look at that as a buying opportunity, guys. Okay. Next, number 19, here's a zoomed in daily view. Just shows you how we bounced off that larger demand zone on August 5th. We've rallied up. We filled that last gap. Not very far from the highs here. What do we, looks like from the recent highs here, 43, 130 points. That seems like a lot, but remember the S&P is, 5,600 now. So new highs aren't very far away. Now, if we get a nice correction pullback here, there is an open gap down here to be aware of, and you have that 50-day moving average. Again, I think that would be a buying opportunity. The question is, do we get it now, or do we maybe test the highs first, make new highs, and then get the pullback? We'll see. But one is coming soon, guys. Just be aware of that. Next, number 20, here's a 60-minute view of the S&P. Again, I pointed out that MACD divergence last week on the 60-minute time frame, and did we get a nice pullback on Thursday, then recovery? Now, that said, did that pullback complete the wave 4? Okay. If it could have, but that's a pretty shallow wave 4. So it is possible this is still wave B, like an A, B. We're getting really close to that last high, and then we come down again. Or another possibility you could see here, that this was a minor 4, and you get a new high here, and the wave 3 up here, then your deeper wave 4. So we'll see. Either one, I'm not sure which one I favor yet. We'll see how futures open this evening. Next, number 21, here's the half-day SPY, showing some of this breakdown of the wave counts. Again, we either completed a little wave 5 of 3 here, or maybe we make another high and then complete it. Okay. Number 22, here's the half-day chart of the S&P. Again, you can see we filled that gap. This area, which was resistance, is now support, which we did bounce off on Thursday. Okay. Chart number 23, 2-hour view, just showing you the same thing essentially. Chart number 24, here's a 30-minute view of the S&P. So we do have this resistance right here. Kind of has an ascending triangle. Look, you can see we bounced out the little demand zone I pointed out on Thursday. So we'll see. We'll see if we break out of this. Right now it looks bullish, but we'll see. Maybe we break out and we form that wave 3, 5 of 3 at that higher price. And chart number 25, here's a 15-minute chart. Again, you can see how this has an ascending triangle look to it. So we'll see if this can be taken out on Monday morning or not. All right, guys, let's move on to the Nasdaq. So here's a weekly view of the Nasdaq, triple Qs. Again, we had a little bearish evening star in mid-July. It obviously played out nicely, but price rallied perfectly off this demand zone. You had 3 things here, guys. You had a demand zone, you had the 50-week moving average, and you had the uptrend line. So you had 3 important technical things lined up. That's another thing about technical analysis, guys. It's fine to have one good thing, but whenever you have multiple technical indicators all lining up, that's usually pretty powerful, and that's what it was. But anyway, we've come a long way here, but the Nasdaq is weaker than the S&P, as you could see. That's why I could see the S&P maybe making a slight new high before a pullback, but the Nasdaq making a lower high here. Again, we'll see how it develops. Chart number 27, here's the daily KISS trend system. Again, just like the S&P, it's done a dang good job. Had a great exit here in July. Got back in much lower than where it got out, so you made money on that. And again, you might ask about taxes. Well, again, guys, that's up to you. I mean, if you're doing this in a 401k or IRA, then taxes aren't an issue. Okay. I didn't design these systems for taxes. All right. You got to figure that out on your own. How else could you have played this to avoid taxes if you're doing this as a tax-free, non-tax-free account? You could have stayed long your Nasdaq or S&P and bought an inverse ETF long to make money on that while you held the index. Again, there's always ways around that, guys. You have to figure that out on your own. I just gave you the analysis and the systems and the tools, but you got to make some decisions on your own like that. Anyway, nice rally here. We've had 3 smart trailing stops now. Still pretty wide from the current price. That's fine. So we'll see, guys, what this does early this week. Image number 28, here's the daily. Notice the 4 time frames. Notice we have a resistance cycle here in the daily where we're struggling a bit, so that's important. ATR, watch this be in support on the half day. Moving BPTMA is pinching into the ribbon, so that's one potential positive. Chart 29, here's the daily standard triple Qs. Again, beautiful rally off that demand zone and 200-day moving average on August 5th. V move up essentially into this supply zone where we pulled back strongly on Friday to the 50-day moving average. Then we bounced on Friday, but inside day of Thursday's big bearish engulfing candle. Okay. You got the 50-day here, 9 EMA. There's an open gap above. There's an open gap below. So we'll see what this does. Chart 30, here's a 2-hour view of the Nasdaq. Again, we pulled back logically after filling that supply zone. We did fill this gap from back here in August 24th. Not exactly sure what that date is there. I can't tell. Bounce off this little demand zone on Thursday. We're coming back up. That said, again, you can clearly see a potential wave 1, 2, 3. So did that put in a wave 4, or is this going to make a lower high and we get the wave 4 later? We'll see. Chart 31, here's a 2-hour view, just shows you the same thing. Wave 1, 2, 3. Like I said, this is some sort of wave 3 of some sort. Whether 4 was put in or we put in it lower, we'll see. Moving average ribbon is bullishly stacked. Chart 32, here's the 60-minute view showing the same thing. We did bounce off that little demand zone on Thursday, but we're still well off that high, unlike the S&P, which is pretty close to that last high. All right, moving on. Chart 33, here's the IWM small caps. Again, notice how that big rally out of the demand zone. Again, guys, start learning where to draw these supply and demand zones. Rally up, and then Friday, Russell really played catch up. Big move, up 3.2% alone on Friday. So it took out that resistance where it stalled from initially. This is your next little supply zone right into here. Chart 34, here's the 2-hour view. Again, you can see the supply zone, which we got a little bit into on Friday before pulling back some. This down here is now, this is actually a demand zone. It just says supply zone, but this is now a demand zone. So on a good pullback, this is a support. All right, guys, that does it for the index analysis. Let's move on. Let's look at some of these indicators. Here's the VIX, which I already talked about that big spike to 66, which was the bottom on Friday, or that Monday, 3 weeks ago. Then the VIX closed back inside its upper Bollinger Bands. Remember, this is a mechanical system. I call it the VIX Bollinger Band system, S&P system. That gave an excellent buy signal there in the market. Look at that. Anyway, the VIX came all the way down to the 200-day moving average where it found initial support and bounced. Chart 36, here's the 60-minute view. Mid last week, I was talking about this MACD divergence building on the 60-minute on the VIX. I said it was at this demand zone. And it did rally off of there. It filled actually 2 of these open gaps before pulling back. Chart 37, some other indicators. Here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. You can see it's now back into the slightly overbought territory. Okay, doesn't mean the market sells here. I'm just pointing that out. Some longer term things. Chart 38, here's the unemployment rate. Remember, this ticked up to 4.3%. But again, guys, if you want a catalyst for why the market will eventually go into recession later on, this is it. Notice how this tends to move, like this tends to go in these long-term waves. These 2 moving averages, the 5 and 13 EMAs, those are fib numbers, by the way. I'm not a big fan of moving average crosses, but because of this unemployment rate tends to trend for years at a time, these moving averages crosses give you these great long-term signals. And the fact that this crossed positive basically in late 2023 shows you that this now should continue up. Notice whenever this cross, I mean, sometimes they go for, 7 or 8, 10 years, but they at least go for 3 or 4 years. So I don't expect this to reverse on a dime, guys. Again, it's like a barge. It's not a sports car. It's going to make a wide turn, So this is going to be on this trend for quite a while. It is only going to go higher, guys. And chart number 39, we got to keep an eye on that yield curve. It's still inverted here. It's inverted, well, this is last updated here. I mean, it's approaching 800 days now. That's the second longest in history. So quite interesting. Moving on, chart number 40, here's the S&P versus high yield corporate bonds. The two tend to be very highly correlated, as you can see. Look at these weekly charts. This goes back to 2019. They move together. Now, you get these divergences that form once in a while. And we did have a positive divergence where high yield corporate was leading higher before the market bottomed. And that's helped pull the market up. Moving on to the bond market, chart number 41. Here's TLT 20-year bonds. Remember that coil pattern that broke over a month ago? I said it looked bullish, and it's had a nice move up here. Honestly, I still think this could work higher. Chart number 42, here's TMF. That's the leveraged way to play TLT. It's the triple ETF. You had this coil pattern that I gave as a long idea back in July. Gave a nice pop to 62 bucks. Hope you took profits. It then pulled back to this area, which became a support zone. Remember technical analysis, previous resistance becomes support. That was another good second buy opportunity there. Chart number 43, here's the 10-year treasury yield, which just continues to melt down. Look at that next decline. Continues stalling right at this 9 EMA. Chart number 44, here's the weekly view. Again, been breaking down. You have the 144 moving average here. I set this as 144. That's a fib. I looked back longer term on the charts. It tends to be a little better than the 200, but that's still below. By the way, there's a demand zone right here. So you can see that as below. Matches this moving average in this area. So rates could come down into this area before bottoming. Chart number 45, here's the other weekly chart that I've been showing. Remember, I postulated months ago this pullback in rates, and that has been playing out. But this is big support area, guys, around this 3.2 to 3.4 area. As you can see, I don't see it going below this. And eventually I see it coming back up. And maybe that'll be the next catalyst for the next major correction in the market, or maybe even bear market eventually. Chart number 46, here's the 40-year chart going back to 1980, showing you the bigger picture. Remember, the 10-year treasury yield is now in a secular bull market, and bonds are in a secular bear market. Okay. They broke this 35-year channel in 2022, and I don't expect rates to ever come down to this area down here, guys. Okay, this area now is a big support. All right, moving on, look at some of the market sectors here. Chart number 47, here's the real estate market with that decline in the 10-year. This finally popped out of this tight coil. I gave this as a long idea over a week ago. Really nice pop on Friday, up 2.14% alone. Chart number 48, here's XOK technology. Again, stalled right at that resistance area. Supply zone last Thursday, pulled back. Inside day on Friday, there's an open gap above. Chart number 49, semiconductors, similar, also stalling. This one stalled right at that 50-day moving average so far. Bounced on Friday following Thursday's sell-off, but it was an inside day. Support below is still that 9 EMA in the short term. Chart number 50, here's XLF Financials. This group has been strong. Really nice rally off that lower trend line. Stalled a little bit up here at that resistance. But remember, they say there's no triple tops. So that ended up being pretty much the case here. It stalled here initially, but then popped to a new high on Friday. Chart number 51, transports. Great example of supply and demand zone. Rallied off that supply demand zone we had drawn ahead of time. Now, what set this demand zone, guys? You had a rally here. You took out that last high. Then you pull back. Then take that out. That bottom of that range sets your demand zone, okay? You had a supply zone up here, okay? Set by these dojis, and that's where price pulled back last time. Anyway, it cleared these moving averages. You had a group of them here, the 20-day, 200-day, 50-day, 20-day. Took all those out, took out the downtrend line. looks higher. This is all big support now. Chart 52, here's XLI Industrials, also taking out those recent highs, making a new all-time high. Chart 53, XOP Consumer Staples, super strong sector. Look at this. Talked about the MACD below. No MACD divergence whatsoever. Chart 54, XOV Healthcare, also super strong group. No MACD divergence. You could argue it's a little overbought, sure, but there's no divergence. So argues that a pullback is a buying opportunity still. Chart 55, Utilities, they've worked their way higher, tend to be a slower mover, but they also took out their recent highs. Chart 56, NE, this is that utility stock. By the way, we gave it originally back here in late July from this coil, and it popped up tagging that recent high. That was a good area to take profits. But to me, this still looks like a cup and handle. Got the cup area, the handle here, and it's now approaching resistance. Remember, they say no triple tops. So to me, I wouldn't be surprised if this busts out of here. Chart 57, here's XLE Energy. Been in a correction since the April highs. Did bounce off this demand zone. Again, great example of that again. It's recovered the 200-day moving average. Otherwise, still chopping around, consolidating from those April highs. Chart 58, here's Oil Services. Kind of bouncing from that lower potential coil trend line. A lot of work to do still. Chart 59, here's the weekly view. I like this potential weekly coil here. Guys, if you're longer term, you could potentially go long here, put a stop below this weekly trend line for a tight stop on a longer term swing. Because if this eventually rallies back to the top of this range or breaks out, you got a hell of an entry. Also, this is a demand zone. Okay. Moving on, chart 60, here's FXI. That's the Chinese market. Beautiful rally off that demand zone. We drew ahead of plate time. We're above the 50-day moving average now. Chart 61, here's yen. That's the leveraged play. Okay, rallied off that demand zone. It's been a nice trade. Here's a Chinese name, Baba, Alibaba. You guys know that. I've shown this before. I've commented how this weekly chart kind of had this wedge bottoming look to it. After the wedge breakout back test, it's pushing higher. And look at your moving average ribbon. It is pinched to hell here. It is squeezed. That's when you can get your powerful moves, when this unwinds. Moving on to commodities, here's DBC. That's the index, up 0.2% for the week. It did hold that lower trend line support and 200-week moving average. You got a multi-year coil forming. Chart 64, here's the daily chart. Again, you had that double bottom support there in August. Again, if you're long-term bullish on DBC, you could be long here with a stop at the lows or maybe this higher low. Chart 65, crude oil. That last week was weak, but it bounced where it needed to. The bulls defended that lower coil trend line, bounced off of it. We're still in it though. Chart 66, here's the daily crude oil chart. You got the coil here. We bounced off the lower coil trend line and that demand zone. See that? You can see the highs back here stalled at the supply zone. Again, what's caused the supply zone, guys? You're in a downtrend back here. You rallied up, then took out that low, so that sets that doji candlestick there as the supply zone. Just like back here, your demand zone was set by the breakout to new highs, break a structure, then higher low pullback, and you mark with the dojis. See how that works? Chart 67, here's UNG natural gas. I gave it as a long idea back in early August out of this wedge. It gave you a great trade, but pulled back. Hope you took profits up there. There's still potential inverse head and shoulder pattern, but this needs to go now. Okay, this needs to go. If this goes down too much more, it's negated. This right shoulder will be too deep. So we'll see if that can bounce or not. Chart 68, copper, Dr. Copper. Again, perfect three-wave ABC pullback. That was a good buying opportunity and that support. There's a little resistance right here. Here's a great example of the moving average ribbons, guys. They get too wide. See that? Tends to be your inflection points, that top and that bottom. Okay. When they pinch like this, you can get powerful moves. Chart 69, CPER was the way I played copper. I'm still actually long. I bought it in this demand zone. I'm still long some of this. Chart 70, here's DBA agriculture. Again, we had that cup and handle bullish breakout in February earlier this year, move up, ABC consolidation and a long-term uptrend. To me, this looks higher over time. Chart number 71, here's the monthly view. Again, notice this. We initially pulled back off that long-term supply zone. That was set back in 2014, guys. Look at that. Okay. But this pullback doesn't it have kind of a bull flag look? So maybe over time we can make it to these other supply zones up here. That would be a heck of a swing. Chart number 72, DBA on the daily. Again, we bounced off the 200-day moving average. We didn't get down to that supply zone on the daily, but we did bounce off the 200-day. And we've cleared all these moving averages, so that's now support. Chart number 73, here's corn. Been monitoring this wedge. I redrew this, guys, the downtrend line here. So still monitoring. You do have an active divergence here, but we need a reversal and break out of the wedge. Chart number 74, uranium had a big rally last week, up 5.9%. You can see how it rallied off its weekly moving average there. That head and shoulder played out from earlier in the year, but nice rally back. Moving on to Bitcoin, chart number 75. Here's Bitcoin, the weekly chart, up 9.65% for the week. To me, I think that last low into that big support area marked the wave 4. Eventually, this should move higher in wave 5. Chart number 76, here's the daily chart. Again, you had an ABC pullback here, higher low. We're trying to work higher here now. Again, the bullish view would be that completed a wave 2, and we're now in a wave 3 higher. Here's some ETFs. IBIT. That's one of the new Bitcoin ETFs, so that's a way to play it. Chart number 78. Here's BITX. If you want a leverage play, that's the 2 times. You can see that was up 11.2% alone on Friday. Looking at Ethereum. Now, Ethereum's weaker than Bitcoin. You can see Ethereum's got a resistance zone right into here. So far, we have 3 ways up in a resistance. So not as strong as Bitcoin. Moving on, US dollar. Here's the weekly view, down 1.66%. Remember this wave 3 I've been talking about the last few weeks? Well, that's been playing out. Chart number 81, here is the daily view of the dollar. Again, we bounced initially off this supply support zone, but then a big sell-off on Friday. Again, continues to look very weak. The only thing I would say is the moving average ribbon is pretty wide here. It's very far away from the 9 EMA, so we could get a bounce here anytime, but the trend is clearly down. Chart number 82, here's Japanese yen. Remember, I've been super bullish on this since back in June and July. That was a heck of a call, I think. And I talked about that last consolidation being a bull flag, and you can see that has played out beautifully. Chart number 83, here's FXY on the weekly. Again, you got a beautiful long back there, a second downtrend line, but held as support. Here's the monthly FXY. Remember, I was talking about this monthly falling wedge with the MACD and RSI divergence. This could go quite a ways up, guys. That would obviously be to the detriment of the US dollar. And let's move to gold. Here's gold on the daily. Still has this kind of wedgy look, right? Still uptrending, but we'll keep an eye on that. Obviously, the sell-off in the dollar is helping gold. Chart number 86, here's the ETF. We had a little coil, little demand zone where price bounced off of. Demand zone back here where price bounced off of. Chart number 87, here's gold on the weekly. Again, we're still working on this wave 5 of 3. Now, once this completes, guys, I am looking for a wave 4 pullback, okay? But this wave 5 of 3 could still push higher first, perhaps. But we do have some divergence here forming on the RSI and MACD. Chart number 88, here's the monthly view. Again, longer term, guys, I view this as a major wave 3 up. Eventual pullback is a wave 4. By the way, there's demand zone down into here now. Would be a good buying opportunity. Again, I think this eventually goes to new highs, all-time highs in a wave 5. I could see gold going to $3,000 or higher over time. Moving on, here's silver. Again, silver had the typical ABC pullback. That was a great buying opportunity. Swing stop down there at that low. Now we'll see if we can work higher over time. Here's the weekly view. Again, you can see that we broke out of the coil earlier this year, back tested that previous resistance, became support. And the monthly chart of silver, love this monthly coil. I talked about this back in March, okay? Coiled spring, we broke out of it, stalled at that first supply zone. Again, you can see why that's a supply zone, guys. You're on a downtrend back here. You rallied up, sold off again, had a break of structure. So that high with the dojis there set up your supply zone. There's another supply zone up here, but I think we make it through these upper supply zones in the long term. So that's a heck of a percentage move over time. Chart 92, here's GDX. Made a new high last week. Little pullback, still holding that 9 EMA for now. Chart 93, here's a 60-minute view. I'm wondering if this is some sort of wave 4 pullback and we get a new high in a wave 5 here. Notice the 3-wave structure pullback. Chart 94, here's the monthly view. So notice you got a supply zone on the monthly back here from 2012, that lower high. So that's nicely higher up there. Now, quite interestingly, short term, the BPGDM gold system, which has been extremely good, gave that buy signal on March 1st. That was so timely. A couple nice sell signals back here. It actually went on a slight sell signal on Friday, so be aware of that. Following up on some individual names, chart 96, here's SA. Remember, I gave this as a long idea 2 weeks ago, kind of a cup and handle look. Gold stock, Seabridge Gold. Nice breakout. In fact, it still looks okay here. Kind of flagging out, looks like. Another one I liked was FSM. That's a silver stock. Weekly chart, ABC into that support and rally off. Here's the daily. You can see that perfect ABC pullback into the 200-day moving average. Here's another one, guys. Another silver play, SSRM. Nice little base. Resistance approaching right up here. You can see that big sell-off back here. That was probably some sort of earnings. Okay. Chart 100, MAG. Another silver play, bull flag. All right, guys, we're going to follow up with some recent trade ideas of ours. FRT was one I put out mid last week in this coil. Man, heck of a move out of the coil. Congrats if you caught that puppy. Chart 102, CB was another one. Chubb I had. I mentioned this coil. I mentioned buying the bottom support of this coil instead of waiting for it to break out because you'd have a much tighter stop. And that was ended up being a good play. If you bought it back here with a tight stop, it rallied up and broke out of the coil. Now here's the daily. The daily looks like it's barely breaking the coil, so this could still have a ways to go. Notice the volume pickup on Friday. Chart 104, BDN was another one I had on the list. Cup and handle, finally broke out on Friday nicely. Chart 105, Unity software, I've had this on the list. So since last weekend, broke out this week, moving up. That's your first target. Chart 106, AMD was a great move off this demand zone. See that? Perfect. So far, logical consolidation around that 200-day moving average. Chart 107, CX, I've had it on the list. I talked about this area being a demand zone, support zone. You can see we did bounce off of there. I'm long this with a stop right there. If it breaks this trend line, I'm going to buy more. Chart 108, CRDF, it's been on the list. Still valid, guys. Hasn't broken this coil. Again, you could be long here now with a stop below the lower coil trend line. Notice your moving averages ribbon is tightly wound. Chart 109, CNC, still struggling with this resistance area. It's still okay though, so I'm leaving it on here. Chart 110 is Capri, new idea, nice clean resistance here at 33.95 to 34. Looks good. Here's your first target zone, this supply zone. Chart 111, Lyft. I personally like Lyft a little better than Uber. Little bull flag look to it here. Chart 112, ANF, Abercrombie Fitch, kind of a bull flag look. This is a 60-minute chart. Supply zone up here, could be a target. Chart 113, UMC, a little Chinese stock, little ascending triangle, good volume patterns here. There's an open gap up here and 200-day moving average. It could be a target on a breakout. Chart 114, Lunar, bull flag look to it here. Chart 115, EVGO, broke out of a nice coil on Friday. That said, look at that volume break. I think this could still follow through. That's why I added it. And the final one, chart number 116, Chewy. Nice little pattern here, potential long. All right, guys, that'll do it. We'll see how futures look this evening. By the way, there's a website, if you don't know, it's called Weekend Wall Street. So it's called hedging. They try to guess what the market's going to do. It shows a slight potential move down. Well, again, we'll see how that works. All right, guys. Again, appreciate all your support. Have a wonderful rest of your Sunday. And if you're just on our free list or you're on YouTube, please consider subscribing. that really helps us out a lot. We're trying to grow our subscriber base. We have a very loyal subscriber base, but we don't really have any marketing, so to speak, except YouTube and stuff. So really helps us. A lot of our subscribers come from friends and fam, or a lot of referrals. A lot of our subscribers refer us to their friends. That's where a lot of our subscribers come. But hopefully some of you YouTubers come over. And anyway, have a great rest of your Sunday. Take care.